Hey, everybody. Welcome to CRE Power Hour. So nice to see you for those of you that are watching live, and maybe you'll be watching the recording later. Stephanie's not here today. She's my wonderful co-host. So it'll be myself and Jesse. We're going to have a great show. CRE Power Hour, we were just talking about, we've been hosting this show for like 2.5 years. It's amazing. And we talk all about commercial real estate, investing, business sales, business valuations. We want to bring you some valuable content, some success strategies, and bring on some rock and roll guests. We've had everything from, we had a coach, a Scott Black, a leadership coach on last time. We've had tax people. We've had rock and roll brokers, kind of cover the gamut. So we're second and fourth Wednesday of every month at 11 a.m. PST, 2 p.m. Eastern. So Jesse Greer, welcome to the show. So nice to have you.
Thank you for having me, Lisa Marie.
Yeah, Jesse and I actually know each other. So do me a favor, Jesse, if you've got any like personal stories, don't tell them on the air today, okay? I got to keep
anecdotes behind the scenes.
Yeah, I got to keep my reputation tight. So Jesse is, I know him personally. We actually went to a CCIM class together, and we've known each other just as being peers in the market because we are in the same market in Nevada. And Jesse, tell our audience about how you ended up in the field of commercial real estate, and then, all of the other things that you do, because you're like me, we have multifacets to our business. But how did you end up where you are today?
So it's been a real fun journey, actually, to get where I'm at right now. And it really comes down to family. And, we work pretty extensively with multi-generational family businesses. And quite frankly, that's where I originated from. So my grandfather came out from Michigan with a typical story of, a dime in his pocket and looking to find better ventures from Michigan to California, and actually ended up starting his own construction company. And then really getting into not only construction, but the development and holding of real estate. And then over the years, it turned into really a family business. And upon graduating from undergrad, I decided to jump into the family business. And that's where I actually got my CCIM designation, which was quite some time back now, which is a certified commercial investment member. And Lisa Marie, you have that as well, right? Or you're pursuing that?
Well, I have one. I'm on the tail end of the process.
Yay.
So by this time next year, I'll be able to wrap a bow on it.
That's fantastic. Congratulations.
Thank you.
So going back to the story, really, real estate is something that was in the family. I ended up getting my master's in real estate from the University of San Diego, started my own company, branched out from the family business, but worked in conjunction with the family business, and then ended up kind of where I'm at right now. I actually just went out and started my own company again within the last about 1.5 to 2 years now. And, what we offer as White Oak Legacy Partners, really, we're a real estate and family business advisory firm, and we focus on empathy, succession, and security of family legacies. And we do that in really 2 different facets. So the first is through the commercial real estate component, right? And that consists of property management, asset management, ultimately syndication, and brokerage. And within the last, I'd have to say 1.5 years, we've really expanded on our other business vertical, which is on the business side. So we offer business brokerage, exit planning, and business valuation work. So we are actually licensed in both California and Nevada, and we do work in both states, but states that don't require license, as an example, for business valuation work, we can be nationwide.
Yeah. Okay. I really like this core values that you talked about. So I want to rewind back to that. So you said empathy,
succession, and security of family legacies.
Okay. So it sounds like what you and I have in common is the empathy part, because for me, that means that I'm understanding the journey that the other person is walking, like in their shoes, looking at things from their perspective, really wanting to understand what it is where they're going, how they want to get there, where they want to end up. Is that what you do as far as your business as well with White
So
Oak?
not only that, but it's about the relatability of it too, right?
Okay.
So when you empathize with someone, you understand really what they're going through, and you really try to let them know that they're not alone in the process. And a lot of times what we do when we work with multi-generational family businesses, we see the nuances behind the scenes of what, let's say, generation one, right, the patriarch or the matriarch, going into generation two or generation three. And really, when you look at some interesting statistics behind it, and this is why empathy is part of it, is because the success of a family business going from generation one to generation two is about 65%, right? Generation two to generation three, it drops down into 30s. And then generation 3 to 4, it's, the low teens, right? And what is the reason behind that? Well, the reason why is because you don't have the proper planning in place when it comes to the managerial side of it, right? So you want to empathize with the owners and the matriarchs and patriarchs and let them understand that, hey, we've gone through issues of shareholder disputes. We've gone through the issues of, if you really want to get real, alcoholism, drugism. We've dealt with individuals and families that are dealing with things that they think might be unique to them. And they think just because there's, a certain wealth behind it that it's different, but it's really not, and unfortunately families that are high net worth or families that are just traditional families, I mean, they go through the same issues as well. So we understand, how to deal with those. We emphasize with it, and we work with other, professional service providers to help guide them through that journey to have a successful transition.
Yeah, that makes sense. And I'm surprised those statistics are as high as they are as far as the multi-generational transition of a business, especially starting out with the family members, let's say a husband and wife who started a business, and they're the foundation of the business, the blood, sweat, and tears. And then what I'm noticing is that as we come into a time when baby boomers are retiring, and the statistics show trillions of dollars in businesses that will be available to be sold. And then we have so many people that want to monopolize on that by purchasing a business so that they can get out of the current of mainstream corporate America and go off on their own, buy a paycheck, buy a business, buy a legacy for their family. So it's interesting to me that as much as we have so much potential businesses coming at us, there's a portion of families where I see that the second or third generation are not interested in continuing the business.
Well, there's a myriad of reasons, right? So in other words, and that's really where a good conversation with the family comes in, right? Because as a business owner, right, husband and wife, I think there's a certain sense of wanting to continue the tradition that you started, that you worked so hard for, that you've been able to provide to your family, right, a certain level of means. And the reality is, the kids might not want to continue that. And I think having those hard conversations from the get-go will help with that succession plan, right? Most high net worth families, and even families that have a substantial amount of worth, spend a tremendous amount of money on estate planning, right, to reduce their overall estate tax. But where I feel like a lot of this fails, where we try to come in and really create that stopgap, is having a plan in place that is for management, that's in for succession, that's able to have the generation one and generation two communicate about what that means to them. Now, you can go to the opposite end of the spectrum too, Lisa Marie, where you have generation two or potentially three that is fully vested in the family business, and they want to take over the family business, but generation one doesn't want to relinquish control.
They don't want to
go about that. Right?
They want to hold on.
They do. And the problem is that there's this control issue, right? They grew the business. They got it to where it's at, right? Granted, generation two helped expand the business, but it was their blood, sweat, and tears. And it was their signing the dotted line, right, on guaranteeing the loans that got them to where they're at. So for them, losing control, or the perception of losing control, is a big deal. And I think that comes down to communication as well, because a lot of the estate planning techniques that we implement with our families, even though they're relinquishing ownership in shares of a company, they're not relinquishing ownership of control until they decide to. But when you look at extensive estate planning like that, it could be pretty nuanced and it could be pretty comprehensive. And quite frankly, it can be pretty confusing. So a lot of business owners just stick to what they know, and that creates issues as well.
Yeah, that creates that rub of its own. So do you help, does White Oak Legacy help them put this succession plan down on, document this?
No. So what we do is we bring what I consider the softer side of it, right? And what I mean by that is if this is a service that you're looking for from our organization, what we'll do is we'll come in, we'll assess the business, right? We'll talk about what professional service providers they have in place already, because it's extremely important to keep the people on the team that the ownership wants to keep on the team. And that's something that we emphasize, right? We're not going to come in and completely, kick everyone out with who we perceive to be the best fit based upon our perception. So we figure out who the team members are, and we figure out where they need certain team members, and we come in and we bridge those gaps. Now, if estate planning is one of them, we can provide multiple recommendations on who they should work with based upon the strategies that they want to implement, because there is a tremendous amount of estate planning tactics that can be used out there.
And then, so every organization, you and I have been in business for a lot of years now, and every organization has its strengths and its weaknesses. So I'm sure a lot of people that have had a business for a long time haven't done a business plan. A lot of them haven't done one recently to really take a look at where their strengths, their weaknesses, their opportunities, and their threats are in their business. So do you help them identify, where those weak points are and how they can round out their team, or maybe take advantage of one of the family members that's there that could put them into the correct position within an organization?
So part of the business vertical that we operate is what we call exit planning, right? And really, we've gotten a tremendous amount of education on what we call the exit planning side and being able to help implement that with our clients. And what I mean by that is let's not only talk about the strengths, weaknesses, and everything else that go with actually running the operations of the business, but as you mentioned earlier, baby boomers, represent probably the largest ownership of businesses that we've seen in quite some time. And when you look at the median age of the majority of the baby boomers, there's this expectation that they were going to be retiring and selling into the market, 5 years ago, 10 years ago. Right. But because of where the market dynamics have taken us, they've held on longer. And, really, they're getting at the tail end of what we consider retirement age. So to your point, there's going to be trillions of dollars worth of potential assets, right, from companies going into the marketplace for purchase. Now, the problem is that really 1 out of 3 of those are actually going to sell. And it comes down to a couple things, right? And one of them, like you said, is really the strengths of the organization, right? Is the infrastructure when it comes to, for example, the management team flat, right? In other words, is the owner doing everything? Does the owner have the CFO hat, the COO hat, right? And even though they think they're saving money and it's going to the bottom line, the reality is if you were to sell your organization, me as a buyer or me as someone that's underwriting your business, I'm going to put in expenses for those positions because I'm not going to come in and buy your business and wear all those hats. Right.
Yeah, so you need the money for the salaries for those businesses to replace the owner has all of the proprietary information, that knows it all, does it all, swapping out the hats. Yeah, we see that a lot, right?
So what we call that normalization, right? So we normalize the profit and loss, and then we also normalize the income statement to what the business should be doing based upon what the market parameters dictate for it, right? So we look at certain databases to analyze that. Now, not to get too far in the weeds of this, and let's step back to your original question, right? If someone were to want to figure out, where their business sits from a valuation perspective, and let's say they want to exit out of this, right? What we would do is we would go in and we'd run a full analysis on the business itself, right? So one of the things that we've really gotten big into is business valuation work, right? And we could talk a little bit more of that later on, but in essence, what I would do is I would go in and I would look at the last 5 years historical of their income statement, balance sheet, and of course their tax returns, and really run an analysis almost as if it's an appraisal for a piece of real estate, but for your business. Yes. And we would say, based upon where the market's at based upon the macro market, the micro market, and based upon what's going on within your organization and how it compares to the peers. Based upon a capitalization rate that we would basically mark up, we would say this is where the value of your company's at. Now, do you think most owners agree with what our assessment is? No.
Absolutely not.
No, right? Because the valuation,
they put all of that work, all of that love, giving up holidays and weekends. And so, yeah, what I find as a business broker as well, is their perception is up here, and maybe what the fair market value is maybe somewhere different than that.
We see anywhere between a 5 and 25% differential.
Mm-hmm.
Okay. So then at that point, we go through and we say, okay, what are some of the strengths and weaknesses that got you to this valuation, right? One of it could be a flat executive level, right? Another thing could be like, as an example, there's a company that says, well, we gross, right? Our gross revenue is around $40 million, right? They have a good net that goes, with that. But when you kind of peel the layers away, they only have 3 clients that are providing that revenue. And these 3 clients have been kind of a handshake agreement over the last 15 years. So do you think if I'm coming in as a business owner to buy your company, that I'm going to discount that revenue stream significantly? Because number one, there's no contractual agreement. It's been a handshake. And lastly, if you leave, will the agreements leave with them? So those are types of examples where we go through and we say, hey, okay, if you want to sell your business, number one, and number two, if you want to sell it close to the price that you would like to see, this is what we recommend doing, right? And we have usually a 3-step process where we identify the highest, what we consider issues to the company, and then we implement processes or what we call 90-day sprints to get to those, right? And we keep doing that process until we feel like we have the infrastructure in place, we have the sales teams in place to be able to accommodate a sale to a realistic party.
90-day sprints. That sounds like one of my most favorite business books called The 12-Week Year.
Oh,
so
okay. I have not read that one yet.
Yeah, I think I've read it 4 times at least. But it takes, how we make goals in the end of, let's say, 2023 for the year of 2024. And a lot of organizations aren't even really looking at their goals until they creep up on Q4. And then they're like, oh, crap, this is the race for the finish line so we can make all those goals that we set a year ago. Well, the 12-week year, which I've adopted within my organization, is that a week is like a day is like a week is like a month, and a month is like a quarter. So you are bringing everything down into smaller increments of time with a quicker, like you said, sprints, so that you accomplish things much more quickly, so you can adjust that curve in the direction that you want to have a greater impact instead of just putting it off, which we know a lot of business owners do because they get caught in their business, or that's their comfort zone of working in the business instead of working on their business. And I think most of the people listening or watching this later can definitely relate to them that's happened. So let's talk about the business valuation side. And, you and I had a conversation maybe a couple of years ago, I guess, a year and a half ago, about business brokering. It was something you were really interested in. And now that I'm listening to you talk about the consulting services that your company offers, I can see how being a licensed business broker, which was required in Nevada, one of, not that many states that actually requires a license. And then the valuation piece of it, because I look at selling a business and valuing a business as 2 separate activities. How about you?
They really are. And business brokerage is such a unique niche, especially in Nevada, where you do have to have a separate permit held underneath your license, which is either held under your broker license or, right, another broker. That the training is more so on the sale of the business itself, right? Not necessarily the underwriting of the business. There is a component of it because obviously you have to be able to talk to a client about what you think the valuation is. But the difference is that with business brokerage, it's a lot of rule of thumbs, right? Business valuation is really something that you have to go through, and you get a credentialed license for it, right? It's a CVA. And that's something that actually, we might have a second CVA in our firm here pretty soon, which I'm pretty excited about that. So nonetheless, the difference that I would have to say is, if I could relate it to real estate brokerage, a business broker offering a value is kind of like a BPO, right? A commercial real estate broker offering a BPO. But to get a business valuation study done, it's like getting a full-blown appraisal from an MAI certified appraiser. That would be the biggest difference between the two, right?
Yeah.
So business valuation, what I've really liked about business valuation so far, because we've been in it for the last couple of years now, is it's a great addition to the commercial real estate side, right? For family businesses, because most family businesses hold real estate, and obviously they own the business, right? But in addition to that, most people that are listening to this that either do commercial real estate brokerage, which we do as well, or business brokerage, the transactional volume is dead, right? I mean, it's a very, very difficult market right now. And that has to do with, obviously, the interest rates going into an election year. It has to do with a lot of factors. But with business valuation work, you don't need transactional volume to get work. So what that means is that we work with estate planning attorneys, right? We work with divorce attorneys. We work with, different attorneys for shareholder disputes, right? So the biggest thing that we're working on right now, which is pretty extensive, is estate planning work, right? And a lot of people are gifting out percentage shares of their business to reduce their overall estate tax. Unfortunately, divorces are still pretty high, right? So when you go into a divorce and you own a business together, you have to have what's called a marital balance sheet. And that marital balance sheet will have the value of the company. And divorce attorneys would reach out to firms like myself to hire to get a third-party unbiased valuation of a company that they're ultimately going to be fighting over. And then shareholder disputes are the same thing, right? So really, business valuation work has really taken off in a time when transactional work like business brokerage and real estate brokerage have really fallen off.
Mm-hmm. Yeah, it's a nice, one of our guests we had on not that long ago has her certified valuation analyst certification. And Stephanie and I both work with her as part of our team. And then her husband's a business broker. So they have this great mix where she does the valuations, he does the sales. And I love business brokering. I recently closed a transaction. It was a car wash, $13 million, real estate, and the business. And for some reason, I've ended up having the wonderful opportunity to work on lots of car wash transactions in the last year. Not sure Fantastic. Why. Maybe I'm becoming the car wash queen. I don't know, but but it's really is a unique. It's very separate from commercial real estate. In fact, when I went to my first International Business Broker Association's annual conference, most of the people there didn't have a real estate license, let alone they're like, commercial real estate, what? So a lot of them are working with Main Street businesses, the backbone of America, and helping them sell the actual business or the asset, and the goodwill and everything that comes along with that, and not even dealing with the real estate. So you and I are in a position where we can handle very successfully the real estate portion, as well as valuation of a business, and then the sale of a business. So tell me, what's your favorite part about what you're doing with White Oak Legacy right now? What gets you juiced up about what you do and how you help your clients?
So we offer one-off transactional work, like I said, with business brokerage, commercial real estate brokerage, business valuation work, exit planning. But really, what I enjoy the most is sitting down with family businesses who are in a multi-generational family business, perspective. And I come from that myself, right? So I understand the good,
can relate,
the bad, and the ugly, right? And it's one of those things where I think a lot of business owners, especially multi-generational business owners, feel like they're really isolated in this bubble, having to deal with not only the business itself, but the family, and then the family that works in the business, and not even the family that works in the business, but the spouses of the family that
Yeah.
work in the business.
The whole dynamic. It's a lot, right?
It really is, right? And for me, I enjoy really kind of diving behind the scenes to understand, who the matriarch, the patriarch is, really looking at the family tree, understanding who's involved, who's not involved, how they structured this, right? And even though, like I said, a lot of times the structuring of it really has minimal conversation with the subsequent generation. So it's understanding really what the goals are of G1, what the goals are of G2 and G3, what the assets are, the underlying assets that are in it, being able to understand not just the commercial real side of it, but the business side of it, rolling it up to what we call estate advisory, and being able to bring the right people in at the right time to help a family succeed. And for me, success isn't always a financial success, but I think that's a huge component of it because that's what we're in it to do, right? But for me, success is seeing a plan put into place that can see this business go from one generation to the next. Now, does that mean that it always has to go to the subsequent generation? No, right? It could go into an ESOP. It could go into, basically an outright sale, right? I mean, there's so many different avenues that people don't realize that are out there for an exit outside of their own family, that opening their eyes up to what other options there are, I think is a huge win as well, right? So for me, the success isn't just the financial side, but it's the inner the family and trying to see the win with relationships and the win with them being able to communicate and move forward with this family business.
I love that. I feel like that. Not only do I feel, I know that what you're doing, Jesse, is a piece of this triad that's missing, because we have the brokerage side, the sale and the valuation, and then you're addressing that family dynamic, so that, because these types of situations can tear families apart, which can also end up in a business that fails, and then nobody wins. So you're addressing this piece of the communication, the underlying dynamics, how everybody fits into that, and then even the families that you don't see that are behind the scenes supporting the family members, the generations that are running these businesses. And so bravo to you for that, because it's definitely a skill that's needed in the market right now. And for the next 15 years, I can see that just continuing to grow. So let's drop some value for our commercial real estate business brokers, and even people watching that are interested in selling their business one day, or even buying their first business. What are some of the resources that you use that could be helpful to our viewers that you could talk about that are available out there?
In what sense?
We could talk about valuation.
Okay.
And let's talk about valuation.
Okay.
Yeah.
Well, so with valuation, let's see here. I think it's interesting because when you look at the specific industry, right, there's paid types of information and there's unpaid, right? So for example, in commercial real estate, a lot of people are familiar with like CoStar, LoopNet, right? And that could help you guide on capitalization rates, maybe where rents are at. With business valuations, kind of the same thing. I mean, there's different resources that we reach out to understand, how to build up what we consider a capitalization rate in business brokerage and valuation versus commercial real estate, because the two are confused quite a bit and they're two completely different things. As an example, commercial real estate, we're using a capitalization rate as your first year return on investment based upon net operating income, and it's usually expressed in as a percentage. So, right now it's kind of tough because we're seeing the market really have minimal transactional comps. So it's hard to get a lot of cap rates that are out there. But like, let's just throw out multifamily, for example. Some of the cap rates that we're seeing are going into, they were, let's say, mid fours. Now they're mid fives, right? I mean, it just depends on the product type.
And buyers are driving right now for 7 and 8 caps. I mean, we have a disparity in the market right now. Again, an imbalance in the market between sellers and buyers. And then development projects is a whole nother realm where that becomes a challenge of, what can a developer pay for a property that it costs them to develop, and what can they lease it for so they can turn around and sell it down the line, for a profit. So yeah, I totally agree with you that on the transaction side, it takes savvy, it takes work of those relationships between buyers and sellers and brokers to make that happen. So on the valuation side, there's lots of softwares, lots of programs available out there. What are
Sure.
some of the things that you recommend?
I mean, it just depends on, what it is that you want to spend and what it is that you want to look at. Right. But, gosh, one of the resources that we use is Value Source, right? And you can
Yep.
get comp information for Value Source. Another one's IBBA. It just depends on the size of the company. It depends on what it is that you're looking to obtain. And I think one of the biggest issues that we come across, and I'm sure you see this in the business brokerage realm as well, Lisa Marie, is the idea of going off of, like multipliers, like, oh, I just multiply my gross revenue by 2 or 3 times, right? Whatever the market is. Well, unfortunately, that's not really the case, right? And you see a lot of discrepancy because of that.
Yeah.
Going back full circle to what I was talking about with capitalization rates, when you look at business brokerage, we actually build up a capitalization rate based upon risk, right? So it's not just a 1-year return on investment like you'd see in commercial real estate. What we do is we say, okay, we take the 20-year treasury, and then we start building up our risk tolerances based upon other companies that are in that sector, right? As an example, with the latest one that I did, the capitalization rate, right, on EBITDA that we applied was about 24%. Okay. So what that means is a investor wants a little under 4 years to get a return on their investment, right? With this particular company, that's how we would price it at. So significant variances in how capitalization rates are used and how the term is even used between the two. So be cautious of that as well.
Yeah, that's a good point. That's a really good point. And it is interesting because there are business brokers out there. So, when I first was interested in getting into business brokering, I had this picture in my mind of some old guy in a basement in an office by himself with his little accounting cap on and just, working. Yeah. And then when I went to my first annual conference for IBBA, which is, really one of the largest organizations that's nationally supports M&A and business sales and valuations and the teaching and expert training of people like Jesse and I. And there's not a lot of business brokers out there, but the old school way to do it is to just, I'm going to look up,
rule of thumb.
Yeah. There's going to be rule of thumb, or they're just going to look up a multiplier in a chart somewhere and they're going to apply it. But now we're looking more subtly at the EBITDA and the SDE and how we're going to adjust percentages. And then you're adding in the risk factor. And there's other dynamic pieces to help really come up with, especially if you have clients that aren't ready to sell their business just yet, to help them make a plan for success going forward. And I'd love to hear that you're doing that. So is there anything else you'd like to share with us before we wrap our show today?
Yeah, sure. So, when you talk about the exit side of it too, right? That's something that a lot of people don't look at, right? They just want to understand what they can get for their business and how they're going to get paid. But what they don't understand is 2 things. One, once you sell this business, that's been a part of who you were for the last however many years, how are you going to transition as an individual? Right? What is going to be the next steps for you so you don't have any sales remorse? And secondly is understanding what you can do with this lump sum of money that you get. And if you can make a higher return in the market than you can in the business itself. And those are 2 things that are extremely crucial that we discuss with our clients. Like I said, it's not just finances with us, but it's also, the softer side, the personal side. Like, who are you going to be after this business? What does that mean to you? What do you want to do with your time? Right? After 2 years of playing golf, because there's only so much golf you can play or whatever it is, the hobby that you have.
Oh gosh, that's so
what's
true.
Next, right? And we don't want our clients to have this remorse. So what we try to do is have them walk through or think through what it means to them to exit their business.
Yes, it's true, because you'll hear people say, I just want to go throw my fishing pole in the pond and hang out and chill. And then like you said, how long is that going to last? And and a lot of these people are just thinking about fixing their current issue of working so many hours and getting the business ready to sell, but they're not thinking about what their life is going to be like afterwards. So I love that. So Jesse, thank you so much
Absolutely.
being on
Thanks
the
for
show
having me,
today.
Lisa.
You did a fabulous job, and thank you for the work that you do and for sharing your knowledge. And we look forward to having you on the show again. And we'll see you next time, everybody, on CRE Power Hour.
I look forward to being back. Thank you.
Bye.
Bye.